I'll ask everyone to limit yourself to one question only, please. And please state your name and affiliation when posing your question. I just want to remind people to mute their line if they're not asking a question. You can do so by pressing *6 and unmute by pressing *6 again. Avant de poser une question, veuillez vous identifier. Libre à vous de poser vos questions dans la langue officielle de votre choix. Pour mettre votre ligne en mode discrétion, appuyez sur *6. Pour l'enlever, faites *6 encore une fois. So we're going to get started. I'll let people know what the first three reporters in the queue. We're going to start with Mark Rendell from the Globe and Mail. Then we'll go to Greg Bonnell of BNN and Kim McCrail of the Wall Street Journal. One question only, please, in this round. Mark Rendell, please go ahead.
Governor, can you hear me?
I can hear you well, Mark.
Excellent. Thanks for taking my question. So just wondering about yesterday's numbers, inflation numbers out of the U.S. They came in much stronger than expected, and I'm wondering if the inflation print from the U.S. has changed your thinking at all about what might be transitory kind of base year inflation and what might be perhaps caused by other things, whether it's supply constraints and all that. So has your thinking about inflation pressures changed at all because of yesterday's U.S. print?
And that had a complete outlook for the real economy and for inflation. We've received 3 more weeks of data since we put it out. And I would say, broadly speaking, we're still quite comfortable with the projection that we put out 3 weeks ago. With respect to inflation itself, inflation right now is just a little over 2. We're going to get April next week. We do expect, and we indicated in the report, we expect to see inflation over the next couple of months go up to the top of our 1 to 3 band. So, something 3-ish. We don't have a crystal ball. There's a certain amount of volatility in the numbers. So I wouldn't 1 month, 1 month's data, I wouldn't over-rotate on it. But, we do expect to see inflation move from a little over 2 to around 3 over the next couple of months. And that largely reflects, as you mentioned, these base year effects. A year ago, economic activity was plunging. A number of prices, gasoline, accommodation, fell very sharply. And inflation's measured at the 12-month rate of change. So a year later, we're seeing some big run-ups in those prices. That'll be a temporary effect. We've also seen higher gas prices, higher commodity prices. That will push inflation up a bit. But the other part is, large parts of our economy remain very weak. There are far too many Canadians unemployed, and that is putting downward pressure on inflation. And so, yes, we expect it to go up to around 3 and then diminish thereafter. So, as I said, that was our view 3 weeks ago, and we continue to be comfortable with our outlook.
Okay, we'll go to Greg now. Bonnell?
As Governor, I know you have a financial system review coming a week from today. I guess a persistent concern in the FSR over the year has been cybersecurity for the financial system. Now we have a real-world example, obviously, with the Colonial Pipeline. Not the front run, what you're going to say next week, but since we have been concerned for several years now about cyber attacks and the vulnerability of our financial system, how are we placed in Canada to handle those kind of attacks?
Well, we will have more to say on this a week from now in our financial system review. Look, cybersecurity, no question, cybersecurity remains a risk. And in obviously with acceleration of the digital economy, with so many things getting more digital, getting more connected, those risks are not going down. I will say, though, that the financial system has invested heavily in cyber protections, and it is doing its best to stay ahead, at least keep up. So there are threats, and we will have more to say on that. But we do think that the financial system has invested heavily in trying to mitigate those threats.
Thanks. We're going to go to Kim McCrail from the Wall Street Journal now, followed by Shelley Hagan of Bloomberg.
Hi, thanks, Governor. Your speech commented today on the impact of extraordinary monetary policy on low rates and quantitative easing on wealth inequality, and you talked specifically about how it can increase asset values like retirement savings plans or pension plans, but you didn't mention house prices, and I'm wondering why not, and if you could speak to that.
Let me just say two things there. First of all, I want to emphasize that, monetary policy always has distributional effects, whether it's lowering interest rates or using quantitative easing. And, there is certainly some evidence that one of the ways quantitative easing works is it raises asset values, and that benefits Canadians' RRSPs, their pension plans, but wealth isn't distributed equally in society, so it can benefit wealthy Canadians more than other Canadians. But I want to emphasize, the biggest effect of quantitative easing is it stimulates spending and gets people back to work, and that is the most important thing you can do to reduce inequality. Get people, get people back to work, getting the income you get from a job. That's the most important thing you can do to reduce inequality. With respect to housing, it is clearly a factor that low interest rates are part of what we're seeing in housing. There's no question about that. That's partly how monetary policy works. It encourages spending on interest-sensitive items, and obviously housing is a big one. Having said that, a large part of this housing boom is very fundamentally driven. There's something like more than 5 million Canadians are working at home. Many students are studying at home. Families' recreation is at home. We're all spending a lot of time at home, and Canadians want more space. And that is the fundamental factor that is driving this. And supply is having. With this very sudden shift in demand, supply is having trouble keeping up. And there's no question low interest rates are making borrowing more affordable. And so that is part of it. With respect to monetary policy, I would just say, we've got to look at the needs of the whole economy. And as I mentioned at the outset, large parts of the economy remain very weak. There are half a million Canadians out of work. There's, I just spoke to students from the Atlantic Canada universities. There's a whole year of students that have graduated into the labor market. And monetary policy, the economy needs our support to support the recovery and get us back to potential output and inflation on target.
Thank you, Kim. We'll go to Shelley Hagan of Bloomberg, followed by Tony Mace from Mace News.
Hi, Governor Macklem. I wanted to ask you about diversity and inclusion within the Bank of Canada. And you said you're focusing on getting more diversity within senior leadership. So will you be hiring a woman or racialized Canadian for the senior deputy governor position?
Well, let me just remind you, Shelley, the process for the senior deputy governor, it's a process that's led by the independent directors of the Bank of Canada. The governor does certainly get to give them some advice, but it's their process, and they make a recommendation to the Minister of Finance, and it's ultimately a cabinet approval. What I can tell you about that process is that it's well underway, and nobody's looking forward to having somebody in that role more than I am. As soon as it comes to a conclusion, we will announce it, and you'll get to see it with everybody else. I'm not sure I can give you much more on the specifics of that process. With respect to the Governing Council more broadly, as I said in my remarks, it is not as representative as it should be. I'm confident that, it has been more representative in the past. You go back a few years, at least on gender diversity, it was very well balanced, 3 men, 3 women, and we saw the benefits of that. And moving forward, I think it will be important for the Governing Council to become more representative of the diversity of Canadians. Obviously, that's not the only criteria where we're going to be looking for certain skill sets. I can't promise it'll be a straight line, but that is something that is important to me and important to the board of directors.
Thank you, Shelley. We'll go to Tony Mace now, followed by Julie Gordon of Reuters.
Hi, Governor. It's Tony Mace. Given the topic of today's speech, are you considering allowing the Canadian economy to run hot to ensure as many Canadians get into the labor market as possible? And toward that end, what would you think about adding a broad-based and inclusive maximum employment goal to your mandate?
Okay, well, you've managed to pack a lot into one question there. So let me just remind you what we've been saying for some time. I mean, for some time, we have been indicating very clearly that the Bank of Canada will support the Canadian economy through the full, to get to a full recovery to sustainably achieve our 2% inflation target. And 3 weeks ago, when we put out our monetary policy report, I did expand on that and indicated that we would be looking at a broader range of labor market indicators. And one of the really important reasons for that is what I was talking about today. And I've talked about it on a number of occasions, this pandemic has had very unequal effects on Canadians. It has particularly affected low-income workers, women, racialized Canadians, new immigrants, youth. And so we can't just look at the macro aggregates. We've got to look under the hood. We've got to look at things at a more disaggregated level, because getting to that full recovery, a complete recovery, an important part of that is it's got to be a shared recovery. And right now, the effects are very unequal. An important thing we're going to be looking for in assessing how much slack there is in the economy and when slack has been used up is the extent to which this recovery is shared. And in that regard, we will be looking at a broader than normal set of indicators, particularly labor market indicators. And with respect to the second part of your question, basically, what I took from that is wondering, would we consider a dual mandate? So look, we're in the process of reviewing our inflation targeting regime. And in terms of the process, I expect over the summer we'll begin to engage with the Department of Finance, Minister of Finance, and my hope is that would be completed by the end of the year, and we'll have an announcement before the end of the year. With respect to the process itself, two elements. We ran what we called a horse race, looking at flexible inflation targeting relative to dual mandate versus relative results to average inflation targeting. And what came out of that is that they all did quite well. There wasn't a lot between them. Flexible inflation targeting, to be frank, is hard to beat. But in certain circumstances, elements of average inflation targeting or dual mandate can be helpful. The other thing, we surveyed Canadians. We ran a survey. We've done focus groups with Canadians. It's been very interesting to get the feedback from Canadians. So on dual mandate, what we heard from Canadians is, in general, Canadians do want to see employment, jobs, playing an important role in our monetary policy framework. Some Canadians were attracted to dual mandate. Others felt, though, that maximum employment is not like 2% inflation. It's not a well-defined number. It's difficult for the central bank to be accountable for that, and so they were a bit hesitant. So we did see some real divergence of views, but I think there was quite a bit of agreement that Canadians want to see employment, jobs, playing an important role in our framework, and that is certainly something that we are taking on board and reflecting on.
Thanks for that. We'll now go to...
It's a long answer, but you really asked me two questions.
Fair enough. We'll now go to Julie Gordon from Reuters, please, followed by Greg Quinn at Market News.
Hi, Governor. Thanks for taking our questions. I just want to ask you about the Canadian dollar. Since your April policy announcement, we've seen that surge about 4%. Is the central bank concerned about this currency overshooting?
So yes, as you mentioned, we put out our monetary policy 3 weeks ago. Canadian dollar was around 80 cents, and so an 80-cent dollar is what we embedded in our projection. So since then, Canadian dollar has moved up. I think it's about 80. I looked this morning; it was 82.5 or so. And the other thing that's happened in the last few weeks is commodity prices have moved higher. Energy's a little bit higher, but the big gains have been in non-energy commodity prices. That's good news for Canada. We export we export a lot of minerals. We export a lot of lumber, agricultural products. So when those prices are higher for everything we export, we get more income into the Canadian economy, and that's good. That's good for Canada. It's bringing more income into our country. And to some extent, the higher value of the Canadian dollar reflects that. Having said that, if the dollar were, to continue to move, particularly if it's not reflecting good developments for Canada, that could become more of a headwind on our export projection in our outlook that we provided 3 weeks ago. And the other thing is, if exports, if we're less competitive, our export profile is weaker, that probably also means that our investment profile will be weaker. So yes, that is something that we'll be looking at. We've highlighted that a stronger dollar does create some risk for our outlook. We've highlighted in the last couple of monetary policy reports. And it is something we will continue to watch. And if it moves a lot further, that could have a material impact on our outlook. And it's something we'd have to take into account in our setting of monetary policy.
Thank you, Julie. We will go to Greg Quinn with Market News, and he will be followed with one last question from Jordan Press of Canadian Press. So, Greg, to you.
Hello. I'd like to follow up on Shelley's question when it comes to diversity on government council. Don't you, as governor, have to put your foot down on this? Could you really be sitting here in a few months and tell us that governing council is going to remain fully stocked with white men?
Well, Greg, I indicated that we're not as representative as we should be, and I am committed to making progress on that. I think it's going to be difficult to give you a specific timeline, but as I said, something that's important to me. It's important to our board of directors, and I do expect to see progress.
Thanks. Jordan, the last question goes to you.
Thank you for your time this afternoon, Governor. My question is really just picking up on some of the things you said in your speech today, which is talking about some of the unequal impacts that even some of the monetary policy tools that you have used might have had on Canada. I'm wondering if there are any tools that you think or any innovative ideas that you think the central bank could take right now to try to ease some of that unequal impact that maybe has been created by some of the other tools that you've used?
Well, let me say two things. First of all, I think an important message of the remarks I gave today, and in fact it builds on some previous speeches I've given about the very uneven impacts of this recession, are that it's really important, as we think about using our monetary policy tools, that we're very conscious of inequality as well as and we're thinking about the benefits of inclusion. And as I said, and I've said many times, monetary policy, it's a broad macro tool. And we can't target specific segments in society. But as a broad macro tool, we can use that tool to really encourage a complete recovery, a full recovery. And important message of my remarks today, which is built on some previous remarks, is that an important element of that is that's a shared recovery. Typically, most parts of the economy, there's a lot of correlation across different parts of the economy. And what's so unusual about this recession is just how uneven it's been. And so we have a responsibility to use our macro tools to get that shared recovery, to get that complete recovery. Now, with respect to our our specific tools, yes, we are and will continue to evaluate how they impact, and we're obviously using some new tools. I've been using them for about a year now. Other countries have used them in the past, and when we've looked at the experience of other countries that have used these tools, what comes out is that QE works to increase spending. That creates jobs, that gets people back to work, and that reduces inequality. We will be assessing, as we come through this, we will be assessing the impacts in Canada and thinking about how we can do even better in the future. But I will say I have considerable confidence that QE is working, and it is helping to lower interest rates that households and businesses borrow at. That is stimulating spending. It is working. We've still got quite a ways to go, but I am confident it's working, and that it will get people back to work.
And that concludes today's press conference. Thank you, Governor Macklem. Thanks, everybody, for joining us and for your interest today. We will see you back here in about a week for the financial system review.
I look forward to seeing you again. Thank you very much.
you.